Hey guys, welcome to this stock market recap. We're going to be covering what happened in the global stock markets from May 5th to May 9th. I'm Robert Montez with Link Financial Advisory. We're going to be going through what helped the market, what hurt the market, and your key takeaways. Let's get into what helped the market. The things that helped the market was primarily the easing of trade tensions. Of course, tariffs, trade tensions, that has been the talk of the news. Anything financial has revolved around that subject. I know because I've been talking about it for about the past 5, 6 weeks now. But those have been easing. And so it is making investors much more confident about what's going on in the market and just people feeling a little bit more confident about where the future is going. We also saw robust earnings as well as employment data. It was a little bit unexpected. The numbers were higher than what was expected. But of course, anytime companies are showing solid profits or we're seeing unemployment have low numbers, that's going to create confidence and people are going to want to invest more. As far as what has hurt the stock market, last week, it was still the same things. Again, trade tensions are going better, but they're still out there. They're still creating some uncertainty. So we don't really know exactly how the story ends. It's heading in the right direction. But of course, it's still out there where hey, things could change at the drop of a dime. Another potential thing that might cause some waves is that we saw the exemption of the de minimis import rule that President Trump's administration changed. So without going super in detail, basically any good that was shipping from one person to another from China to the United States that was under $800 was able to avoid all tariffs as it was coming into the United States. That rule has been gotten rid of. So it could create the worry for higher costs, but we don't know. We'll see what happens there. But that's a potential maybe hurting. As far as key takeaways, I've been talking about it over and over. Just a reminder, this year, so the stock market, the S&P 500 last week finished down only about 0.5%. And year to date, the S&P 500 is finished down last week Friday at 3.8% negative. So why do I say that? Just to let you know, it's not doom and gloom. It's not the end of the world. It has been a bumpy ride getting there, but year to date, it's only down about 3.8%. If we take a longer term perspective, over the past 1 year, the S&P is still up over 8%. Over the past 5 years, the S&P, I believe, is still up 13 or 14%. The past 10 years, I believe, yeah, 5 years, 14%, 10 years, 13%. And over the past 20 years, we see the S&P is still up about 10.5%. So take a long-term perspective. Don't get caught up in all the craziness. The news is going to try and give you bad news, make you panic, and people make dumb knee-jerk decisions when that happens. Take a long-term perspective. As always, guys, if you have questions, you'd like to get a second set of eyes, or if you're a 401k plan administrator who's really focused on increasing financial literacy for your employees, Link Financial Advisory, we're your guys. We'd be happy to talk to you and give you a second set of eyes on what you're doing and be a value added resource for you, your family, and your team. Thank you guys so much. Until next week, take care.